Hello, this is Clark Kendall. It's Friday, May 15th, coming to you with the weekly update. Kind of what's going on in the markets from a financial perspective. I call them the COVID stocks we've mentioned to you before, have continued to do well. Many of them are up for the year or at least not down for the year. Reminds me a lot, as I've mentioned before, of the Y2K stocks. Back then it was Qualcomm, Cisco, and Dell's in the portfolio that actually did quite well leading up to the Y2K crisis, but afterwards kind of fell off. Same thing happened back in the 1970s. Back then Eastman Kodak, Hewlett Packard. These stocks have been story stocks. They've done well. I worry about kind of the huge valuations. On the other side of the coin, over the past month, the broader market actually has done better than the widely followed S&P 500, the Dow Jones, the Russell 2000, which we use to measure kind of the broad index. They've actually recovered well, and we're proud to say, as I've mentioned, those types of stocks have actually participated in the recovery over the last month that we've been there. From a macro point of view, I've also clearly pointed out that from a financial perspective, the financial markets are looking for depth and duration of the pandemic. How long will this last? How much will it affect it? And I think that's what the market's going through right now. We're trying to determine, when can we open? How will we open? And the financial impact. And that's why I think we're continuing to have these up and down swings. Today they released the retail sales for April. Retail sales were down 16% for the month of April. It was expected to be down. It was down. We continue to have high unemployment numbers, but on a relative basis, they're actually starting to come down. I think everyone who's filed for unemployment is starting to get those benefits. Another thing that's come up in the news this last week is this continuing escalating trade war with China. It is, quite frankly, no one long-term wins in a trade war. I hope we can work out our differences with China because having efficiencies of each country and economy throughout the world allows everyone to produce and enjoy a better life. What supported the financial markets, I repeatedly say, it's been the federal financial response. It's been quick, it's been fast, and quite frankly, it's been huge. As I mentioned before, $12 trillion divided by 350 million people in the United States works out to over 35,000, and they're talking now about adding an additional stimulus package. That will continue to support our financial markets. I do believe the lows that we saw in March will be the lows for this pullback in the market, but I don't think we're going to recover quick. The financial markets are going to recover quickly to new highs within the short term. For the time being, this is going to be our last kind of weekly update. We're going to go back to our either bi-monthly or monthly updates with different financial facts. But as always, I've enjoyed the opportunity to visit with you either on a one-on-one basis, either by Zoom, emails, and I look forward to seeing you face-to-face in the near future. Take care.